take a look at this. A whopping 71% of Americans believe the U.S. is headed in the wrong direction. I mean, that's almost three-quarters, right? Leo Kelly joins me now. Leo, are you surprised by that number?
Not surprised at all. This has been a tough road over the last year or so. The economy is really sending confusing signals. On one side, the jobs market is very strong, but on the other, wages are buying less and less with all the inflation. And of course, we have a stock market and bond market, which had a horrible year in 2022. So portfolios are down, 401ks are down. Folks are just confused right now.
Well, I noticed perhaps a little glimmer of light, a little glimmer of hope in your points of view, Leo. You said you've been bearish for the last 18, 24 months, but now perhaps looking a little bit better. Is that overstating it?
No, I think that's accurate. We've been looking at the markets, and we were never one to believe in this transitory inflation nonsense. We thought the Fed was well behind schedule in trying to battle inflation, and that's really the primary reason we were so concerned about the markets. As we look at 2023, we have more ground that we have to cover. There will be volatility. The Fed isn't done. And remember, the Fed gets what it wants. It's going to tame inflation, even if there's a recession coming as a result of their actions. They have been clear and they have been resolute in their language. And so I think investors have to understand it's going to be a little choppy. Now, on the other side of that, time has a way of healing these issues. So the Fed is finally getting in front of inflation. Prices are down, which means assets are cheaper and are better buys. And I think that we're going to start to see a new leadership start to emerge over the next couple of years and give investors the opportunity to start to make money again. So I would tell investors it's good to have cash on the sidelines, especially when treasuries are paying over 4%. And it's good to have those cash holdings as dry powder to take advantage of volatility.
Any particular areas that you think are still good value at this point?
Well, we think the transition of leadership is still early. And so whether we're talking about value, traditional value securities, international stocks look historically cheap relative to U.S. Small cap stocks look, again, very, very inexpensive relative to its large cap brethren. I think for investors, the bottom line is simply this. You can't look at what has been successful in the past and just hope it goes back to the way it was, because that's going to be a struggle. We have rising rates. They're going to continue to go higher. We believe, quite frankly, we are in a secular bear market in bonds, meaning interest rates are going to be going up for a long, long time. That changes the dynamic of the market. It brings in volatility. It makes it a little harder for the growth stocks. So we think it's time to rethink how you look at the markets. This isn't a market you just throw the money in the S&P 500 and go to sleep and make the highest rate of return. Those days are behind us.
They are behind us indeed. Leo, terrific information. Thank you very much for joining us this morning. Let's